right, welcome out to this week's week-ending and month-ending review and playbook prep, market analysis, and preparation for Peak Horizons Capital. It is month-ending, week-ending, July 31st, 2026. Let's dig right in. A wild and crazy week for the market, a wild and crazy month for the market, to be honest with you. A lot of mixed signals, a lot of mixed wind. Been kind of one of the, a lot indexes going one way, mags going another way, AI theme stocks going another way, and really the navigation has been a little tough. But when we start looking at the returns, we're going to identify a lot of different stuff. We end the week with decent gauges, right? We have a uncertain and neutral market condition. The intermediate trend is bullish. The short-term trend is also bullish. It wasn't like that on Thursday. Wasn't like that on Wednesday, Tuesday, Monday, or into last week. We can see the short-term gauge has really been bouncing back and forth. When we look at the chart, it just doesn't look like a very good trend. It's going sideways. There's been a lot of rotation. It's tough to pick up and hold something for more than a couple days before it starts getting sold off. So our returns, kind of really give the full picture here. First, let's go ahead and talk about the week returns, then we'll talk about the month returns for a couple seconds here. When we're looking at the weekly returns, you can see the SPY was up 1.1, the Qs were up 0.55, the NASDAQ 1.71, the mid caps were down 0.64, the small caps were even-ish, and look at the Mag 7 up 4.45. And so these were way down, way down, and then they're back up. We'll look at the Mag 7 chart also. And you can see the returns here, right? Our ultra aggressive, which is a lot quicker in the trading and the movement of money, was very AI heavy, right? And you can see some of the monthly effects of that, 5.59. You look at 5.59 for the month, down 5.59. You look at the SPY 0.03 and you look at that and you got to wonder yourself, wow, way off pace, right? But the beginning numbers, right, the since inception numbers are outpacing the S&P 500 still. So a lot of volatility, a lot of rotation. You can see right here, look at the Qs. The NASDAQ 100 down 6.57. And we got caught in a little bit of that in our strategies. The small caps down 3.8. And then the mags were up 2.58, although the SPY was only up 0.03, right? So like I said, a lot of stuff all over the place. We decided to play some defense after it got crazy. The markets ripped off the bottom for a couple days here, Thursday and Friday, and we just undid some of the defense. So some of our returns were lagging for a couple days. But if this is going to be a trend, and this is going to be a bullish trend, we'll get back into all offense, and our betas will be set in a way to where if the trend remains bullish, we'll be in a position to do nicely on the uptrend. So not too disappointed in what's going on. Just markets are kind of all over the place right now. So let's go ahead and look at some of these trends. Now, the prevailing idea here is the intermediate trend has been bullish the whole time. So you would never go so crazy as getting massively defense when you have the intermediate trend in an offensive position. And so we took little tiny defensive moves, not going too heavy defensive. But you can see here that it's still sideways, and it's been sideways for months now, right? So not a lot of opportunity, and which indices, which areas of the market want to lead have really been bouncing around. You can see visually that the last time we had something that was this long was probably in this area, and then it resolved to the downside, right? So, we have to still kind of, in our mentality, be cautious, right? But we know that the odds are in our favor for up days when the S&P 500 is over its 30-week moving average. You can see 56% of the time, price will be up for the day. If we look over the short-term chart, I think it tells a little bit more of the story of what the markets have kind of been through the last few weeks, last week, right? And so let's just look. This is that area. If you remember on the intermediate chart, it was just kind of going sideways where I said it was going sideways for months. And you just kind of look right here and you can just kind of see, what's actually been happening. We have a pretty big down, This was the top, a huge down. Then we rebound. Then we're down. Then we kind of rebound and we're down. And then there was, maybe a topping line drawn here. And we kind of broke out, and that could have been a signal we were ready to go. But no, just more chop, right? More trickery. And you can see down, and here's that big day that we reference, that we've been referencing, where the markets pushed way down, sold at the low. This was after the Fed meeting. Lo and behold, news comes out about a hedge fund that blew up that was highly leveraged in AI stocks and had to sell a lot of its positions to pennies on the dollar. And Griffin came in and bought them up, and that could be the bottom. So now where you're probably getting very bearish when we break below here, right? And you're thinking, okay, where's it going to go down to? This could be a logical area. This purple dotted line is the 30-week that we're looking at the other chart. Could go down to here. So you don't want to be holding that whole way down. So you twist the portfolio a little bit, slightly defensive, like we did. And I would say if any of those 6 strategies, they all have different mechanics as far as percent offense, percent defense. But of the offensive side, we didn't get more than, I think the ultra aggressive was 60% of what it would be on a max offensive situation. I think the aggressive was 85% of what it would be. So they were still very predominantly offense. But we have a snapback and markets tend to rise. We get a second day confirmation. Now a little bit selling down from the top of that day, which is right here, but it closes over the 20-day, closes over the 50-day. And, we could just swing back down Monday, Tuesday, Wednesday after weekend. Who knows what happens over a weekend. But we could still push higher. And then I would say the next bit of resistance would be this line that I drew. And then above that, you might be ready to go to new highs. So we have to, we have to protect. We don't want to just hold through a complete sell-off if this thing would go down. And over the course of time, our philosophy is that's going to pan out, in our favor. And but we need to be offensive if things are going higher. So this is just kind of like that middle zone. And if you were just buying and holding, then you would have this complete volatility. And if things broke down further, you'd be going down further, right? So that's a little bit of how we're looking at things right now, looking at kind of the broad different areas. This is, to take those returns that we looked at and just kind of like really visualize them. We have the S&P 500, we have the Mag 7, we have the X Mag. So the Mag 7 is the 7 largest. And then we have the X Mag, which is the S&P 500 without the 7 largest. So just kind of focusing right here on these 3 first. The S&P 500 is closing above the 50-day. Looks like there's a data point here that might be some after hours data point, but right here on this day. Then we have the Mag 7. Look at this flush. You're going from, way up here all the way down here. So above $70 to, $60. You're at 15%-ish drawdown from the top. Do you want to be holding on to that? Who knows how much lower that would go? Then you have, a rise back up, a gap down, and we're in an area right here where this looks like it's going lower. And then the whole flush of the hedge fund happens and we're ripping back up. Now, we're not above the 50-day moving average, but you can see a 3.19% day on Friday versus the XMAG 0.04. So not all the winds are moving in the same direction, right? There's some swirl out there, and it's like a tornado running through. So we're trying to, still remain optimistic and be in a position if the market comes out of this, which I think is the right way to think long term, intermediate term. But also in the short term, you don't want your house to get blown to smithereens because of the tornado. So we don't want to be holding on to everything and just see the tornado wreck our property and take us down, right? So we have to kind of balance, and that's the appropriate way that we feel like how money should be managed. Now you look at some of these others, right? Here is the QQQ, right? So that doesn't look very good. I mean, look how far down that is. The mid caps have been sideways, but they had a negative day on Friday, and the small caps were looking good, but they were negative. So, more rotation possibly. Looking at some of the different sectors that are out there, Bitcoin just, at least it's off the bottom, but it's having struggles getting over the 50-day moving average. Here we have tech. I mean, tech might be ready to rally, and I'm putting it on the watch list, to be honest. I'm going to look to see if this AI trade is going to come back after everybody has kind of left it for dead, maybe. Discretionary, I mean, how can you have such a big gap down and then a rally right back? Industrials, which was strong. Energy, I mean, this could change. Anything change with the Iran conflict, this is going to change really fast. Gold has just been completely wrecked, right? Financials was looking good. Healthcare still was looking good. So I think a little bit of love towards tech right now might be the way to go. So we got the mags. Looks like that's coming back into play. The X mag is down. This is the top 100. This is the S&P 100, and this is the FANGs, which is like the mags plus 3 other stocks that are pretty big market players. So probably not Bitcoin. I'm going to check off tech. I'm going to check off discretionaries just to see if this is the end of this long relative strength. When I talk about relative strength, we're talking about different areas of the market compared to the S&P 500. Materials, energy, financials still looking very strong. Healthcare, but coming back in. Let's just put healthcare to the side really quick. Okay, so I think these areas right here are really, let's check the financials chart again. A nice run for financials coming into could be new high, all-time highs. I don't know. It's at least new relative highs. Tech. I mean, definitely you could draw a line right here. You can see that this is in a downtrend, but if this was the bottom, and it's almost like a capitulation, right? We have a bottom here and a bottom here, and these are kind of in the same area, and then we have this push lower and a rip back up. So let's see if this thing wants to right itself. We're just going to kind of look at it. If it goes sideways and then pops back up, that might be a way to kind of get into it. If it, or maybe if it dips back down and then kind of comes back up, and this is like a higher low it creates, because we want to be in uptrends, and uptrends are defined by higher lows. Downtrends are defined by lower lows. Energy, it's just such a wild card right now. I mean, this is very all over the place, and typically energy proves you don't want to buy on strength. You kind of want to try to figure out a way to buy on weakness, but it usually looks so bad you don't know if you want to do it, because if it looks weak here, look how much weaker it got. If it looks, strong here, look how much stronger it got. So it's kind of a counterintuitive thing to, okay, I'm going to buy right here, because trends tend to trend a lot longer than you think they would trend. So take a quick look at the group RS. Okay, so this thing's completely built out now. We have outperforming the SPY, underperforming the SPY. And so also anything that's highlighted, this is brand new in this area. So a lot of these were winning, now they're losing. And that just also shows you again how much the money has been kind of just flipping around. So it's choppy out there. And as I'm kind of looking through these, I'm just going to kind of check. Now what I'm going to do is I'm going to go into each one of these eventually. And we'll look at individual stocks that, not on this video, but we'll look at individual stocks that might be leading some of these areas. I'm going to check off cybersecurity, because cybersecurity looks really good. We'll look at a couple of those stocks actually. There's the mags popping up. Okay, good. All right. So let's go ahead and look at a couple names just to kind of end things. We'll look at some cybersecurity really quick. Now, our ultra aggressive already has a position in CrowdStrike. And this really looks like the best area. You can see a nice run up, a base formed, a breakout. Now, the market pulled everything down, but found support at the 50-day. Remember, the market is just barely over the 50-day. This was coming, and it had to come back up through the 50-day. This came down and turned back up. So you can see the RS is now turning up also. And it was an RS, relative strength leader. When I say RS leader, I'm talking about compared to the S&P 500. This was outpacing. So it was a leader. I think it's going to continue to be a leader. The thought process here also is all the AI builds and all the software development that people are doing is going to need some kind of cybersecurity, right? So crowds in there. Now let's look at PanW. It's looking just the same, almost the same kind of formation, right? So this is group strength, not just company strength. So we have an extra wind at our back by having group strength. Let's look at HACK, which is the ETF. Looks the same. Let's look at Okta, another one name in this area. So it looks the same, right? Big up. This one actually looks a little bit stronger, I think. But we have a position in CrowdStrike. Let's go ahead and zoom in on the mags really quick. So a big sell-off, thrusting off the bottom now, mainly on Amazon earnings. So look at Amazon jumping big time, right, on earnings. So, and then let's look at Microsoft has really been the dog. And look at that. Great earnings and extending higher. So this really could be the turnaround point for the mags. And maybe this fuels, let's go over to SMH, which is the semiconductors. This really could fuel maybe some of this area. So this is indicative of the AI sell-off, right? SMH from top to bottom down 25%. Some of the stocks that you're thinking about inside of SMH, a big name, which is also in Mag 7, NVIDIA, trying to bottom, found support at the right spot, a flip zone, was resistance, now support, now turning back up. Let's look at a memory stock, MU. Highlighted this one in the email, down 41% from top to bottom. This day alone was a 10% down day, then snaps back the next day up almost 20%. In fact, I think if I line these up exactly, it'd be up over 20%. I'm not sure, right around there. So if this one's bottomed, and wants to turn back up, you probably want to get back into, EMU. Other names in this memory area, SanDisk. I mean, look at this one, right? It goes from, if we went all the way back here, we're $63 to $2,400 in about a year. I mean, are you surprised after, I don't even know what return that is. Is that the thousands % return? No, $1 would be, $2 would be 1,000. So hundreds of % at least. But you go from this point to this point, over a 50% down. So very volatile. So overall, we're seeing a lot of crosswinds. We're seeing, maybe the AI trade bottomed based off of a highly leveraged hedge fund blowing up and a reversal in those assets. So we're going to keep an eye on them. We're not buying them right this second, but we're keeping an eye on them. Could make a move this week on them, depending on how the price action works. We're seeing changes, reversals. We're seeing a lot of different rotation going on. The markets overall are sideways chop. We haven't seen a lot of opportunities that have stuck the landing. Cybersecurity looks really good. So that's a little bit what we're going to be looking at this week. And if the markets want to follow up and confirm their strength, now they're over the 20-day or 50-day, we're going to be looking to play offense. If it fails this, bust over the 50-day and 20-day, and it comes back down, we'll be looking to play a little bit more defense and not be as aggressive. And so right now we're just kind of chopping around, positioning, and being ready for the market to make the move either up or down, whatever it's going to do. That's what I got for you this week. Take care. Have a wonderful weekend, and we'll be right back at it on Monday.